Let's see, are we back? All right. Well, hang on. I gotta get my YouTube back too. Hang on. Yeah, I think we're live now. All right, hang on. Well, I guess this is where I do testing 1 2 3, testing 1 2 3. The rain in Spain falls mainly on the plains. The ants in France stay mainly in your pants. I just don't have chat yet. This is the issue. Okay, so now I got my chat. Yeah, okay. I guess we're back. All right, well, happy day. Today is a Thursday, the best trading day of the week. Today we will go through the calendar. We got some GDP, so I'll just show you that. Also later on, if you're in my live trading group, we will be doing our swing trading. So thank you for being part of the community here, the Forex.Today YouTube community of almost 18,000 foreign exchange traders. Very cool. Thank you for being here. Thank you for all the positive energy that you contribute to this community. I appreciate you. You're good people. So let's get on with it. 3, 2, 1, hit it! Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So hi, my name is Wayne McDonald. I am a currency trader. I've been trading currencies for over 15 years, closer to 20. Before that, I was a venture capitalist, investing into high-tech products and services and such in the Silicon Valley. Man, I need a haircut. It looks terrible. So anyways, so ask questions, get involved. The reason that we are meeting at this time today is that we are here to put together trade plans for maybe the rest of today, but the rest of the week, and of course next week and next month, and so on and so forth. So ask good questions. I'll do my best to give you good answers. Make sure you write things down so you learn. The whole point is to learn. I'm not here to put you into a trade or give you a trade signal. I'm hoping you learn how to be a conservative, disciplined currency trader. We use macroeconomics and fundamental analysis to create a strategy. And then once we've made a decision on the strategy, then we use technical analysis to confirm or deny the market conditions for that strategy, and then to find the right price and the right time to enter the trade. But we don't look at a chart to decide what to do. Okay? Cool. Very nice. I'd like to thank Traders Way for being part of our community as well. If I help you become a disciplined, more confident, more skilled trader, and you say, well, I think I'm ready to trade real money, you're going to need a broker to enter your trades into the interbanking system. And since you're talking about real money, you need someone that you trust. And Traders Way has earned my loyalty and respect. So visit tradersway.com and open up a demo account. Start there. Practice there. Download MT4, download MT5, and develop those skills that you need, so that one day you can trade real money and have not just be a trader and make quick bucks, but actually instead look at your trading like a business and be able to trade and invest for a living. Tradersway.com. Yes, that's right, Big Perm. Yeah, so if you're in my live trading group, we are meeting today to do swing trading, looking for or setting up trades worth, 300 pips or more. Thank you, Guy. Yeah, I messed around with some of the settings. Also, my air conditioning is on, but I don't think you could hear it, so I think the noise cancellation is better as well. Okay. What is my outlook for the 10-year T-note for next month? Well, what's the trend? Sure, Vaughn. It's up. Yeah. So we are in a collapsing, artificial bullish market that is now going back to normal price and rates. Well, I would expect that to continue. Yeah, I'm also playing it up a bit, Guy. Yeah, I'm throwing it in there. Welcome to Paramount's Great America. Yeah. Okay, cool. So anyways, all right, so we're here. One of the things I'm looking at here on the Traders Way website is I pulled up their calendar because they give us a little more detail on some of this information. So in 14 minutes, we got the next release on GDP. And you can just see, typically we're cruising along here. 5, 2, 3, 3, 4, dipsy doos, some dipsy doos. Okay, 3, 3, 3, 3, 2, 2, 2, 2, 3, 3, 3, 4, 4, 4, 3, 3, 3, 3, 3, 3, negative 33%. And so, this is what I've been talking about as far as people being skewed on their numbers. They're freaking out about the negative 31, and then they're freaking out about the positive 33. But once we shake out these outliers, we'll just go back to average, right? And we'll be farting around at 4s and 3s. Cool. Right, so I treat these as outliers. I understand the drop because of COVID closures, and then the spike because of reopening, and then the drop because of reclosing. Whatever, like we're just moving back to the average. So like if we went from negative 33 to plus 33, what happened? On average, nothing. Okay. Richard, because of the lack of correlation in the Swiss franc over the last couple of years, I'm just not really interested. Okay. Richard says, hey, if you read the S&B report, do I expect weakness out of the Swiss franc? I want to see correlation before I'm interested. So I have no outlook. I have no interest. It would be the last thing I'd do. So it needs to prove to me that it's worthy of investment. And I want to see traditional correlations, because if there are non-traditional correlations, it's another level of risk. Ultimately, what it means is I don't understand. Like I'm expecting Swiss franc weakness. That's true. But I've been seeing the opposite, and I'm confident enough to say I don't understand. So in a situation like that, I don't invest. Like, isn't that one of the rules of investments? Know what you're investing in. Well, I don't understand Swiss franc over the last 18 months or so. So I'm just not even interested. Should it be weak? Will it be weak? Yeah, I don't know. I don't really care. Right. But when it comes back and I see the correlation, I'll have the boat loaded in yen and I'll have the boat loaded in dollar. And then I'll see that Swiss franc correlation come back. And then I'll say, well, maybe I'll test these waters. Maybe I'll put a couple on the Swissy and see what happens. But not until it proves to me it's worthy of investment, not the other way around. Okay. Good question, though, Richard. Cool. Aight. Very cool. All right. So right now we still have dollar strength. We still have yen strength. Kitty CAD kind of normalizing. Swissy strong. So here's the thing, like going back to Richard's question. When the dollar is strong and the Swissy is, sorry, let me say it properly. When the dollar is strong and the yen is strong, I would assume, historically speaking, Swissy is strong too. So there's the correlation I'm looking for, but I'm not ready to say that is now the correlation. Okay. Kiwi all over the place, so I'll call that neutral. Euro all over the place, I'll call that neutral. Aussie all over the place, I'll call that neutral. And pound strong. So really, there's nothing dramatically weak. So really, at the moment, there isn't a giant opportunity for trade. Now, we will go through the charts and I'll show you that we can start planning, but it's not there yet. So even if you're on pound, everything else is like there's nothing weak here. So you're on pound. If you're making money, you're still trading something strong versus something a little bit strong. And it's ends up not being that great of a trade. Yeah, let's look at Biddy. Bitcoin is moving down to our second trade area. Okay. Ba 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 ba. So we're almost there. And what that says is there's a chance based on, remember, this isn't an opinion. This is just a Fibonacci retracement. We said if it comes back to 50, which we're about to do, we're at 51. So if we bounce at 50-ish, the target's going to be 65. So I can delete this because we're through the 382. Invalid. Okay. Cool, right? Do I close my trades manually? Certain times of the year, for sure. But I like to hit targets, Fet. I don't like to double guess myself. And then, like, I owned the pound a few days ago, and it didn't produce. No, it was Kiwi, sorry. I owned the Kiwi the other day, and it wasn't producing after about 24 hours of me being in the trade. I wasn't losing money, but I wasn't making money. So it wasn't like I was fearful of the loss I was taking because I have stops in, but it just wasn't doing what I thought it would do. It wasn't. I wasn't losing money, but my trade plan wasn't happening. So it was farting around break even, and I'm like, well, should I get out of it? And I'm like, well, I can't get out of break even. I need to take a loss because a trade plan that doesn't execute the way I planned is a failure. So the worst thing I could possibly do, the worst case scenario, is get out with 4 pips profit. That's what a loser does. That's what a loser does. Hide their losses and call it a win. Really? You planned on making 5 pips? That was your trade plan? No, fail. Okay? So I'm sitting there at a couple of pips. I'm like, man, I got to get it out of this sucker. It's just not doing what I want. My plan has failed, but I can't call a failed execution or a failed trade a winner. So I waited until it was -5 and I took the -5 pip loss, marked it down as a losing trade. 5 pips doesn't kill me, right? And then the next morning I saw that if I hadn't gotten out, I would have lost like 150 pips. Of course, I have a stop somewhere in there. So my point is I manually got out of that trade. Well, I didn't get stopped out because I lost 50 pips. I didn't get stopped out because I was up 100 pips. I took the -5 because my plan failed. Okay. Okay. Stuart says, can I download that index chart indicator also? Yeah, metatraders.com. You just entered a credit card, Stuart, and it's yours. Mm-hmm. Okay, cool. So anyways, there's your biddy. It's down, but if you want to be a bull, it's buying a drop on the medium term, but on the longer term, it's a dip. So it comes down to your time frame analysis, your risk tolerance, your conviction, a lot of different things. Okay. So for example, if you're only looking over let's say the last week or so, this is clearly bearish. And it's a lower low over this medium period. And you don't buy drops, you buy dips. So before you buy it, to make it a dip, you need an inverse head and shoulders. And you'd be long here. Oops. Same price, just less risk. Okay. Now, on a higher time frame, we understand the general strategy is this. Okay. Okay. Well, Stuart, too, there's the $5 toolkit, and then the complete toolkit with, I think, what is it, a dozen more tools. So I don't know what tool you're asking for, but if it's not in the $5 one, pay for the upgrade. But the $5 tool gives you everything I think you absolutely need to trade. The other stuff's just fun stuff. Not necessary, but helpful. All right, cool. So anyways, here's our bearish trade plan from yesterday. And remember, we didn't set this up on a 1 hour. We didn't set it up on a 15-minute chart. We set this up strategically. I said, if you were a bear, because somebody said if you were a bear. I'm like, okay, I'll set this up as a bear, not a problem. Okay, and we started this on the daily chart after you told me your strategy was to be bearish. And we're in a sell zone here. Actually, sorry, that's what this green is. We set this up yesterday as we're in a sell zone yesterday. And then on top of that, we are in a sell zone sort of in this period. Okay. And we're working our way around. Okay. So the bottom line is, hang on, I got to close this. There we go. The bottom line is, okay, that if you are a bear, what we have planned out is that your 618 predicts a 1382 and you're on your way back to 17. It's actually 1717. Okay. And that's a really mediocre trade at best. Okay. But I think if you look at it again on the daily chart, we are thinking much lower than that. Okay. I got to change this. That's what's wrong. Indicators. Because we're a bear on this one, so let me get rid of that. So we have targets is what I'm trying to do. So we're actually trying to make a 500 to 1 trade. Okay. This says we're on our way to 1650. Cool. Cool. That's it. That would be an example of like a swing trade, for example. Someone else is trying to make $50 today. With a little extra analysis, you could say, well, we're in a role reversal zone. in a bearish trend, kicking it off the daily 21. And if we get this right, based on pivot points, for example, this should head down to 16 and a half, maybe even 16. Okay, most likely 16 and a half. Okay. If you already have a trade plan, will you use limit orders? Yeah, of course. Yeah, I use a 5 minute, 1 minute, only to enter though, Shervan, right? Only to enter. Okay. But that's just me pulling the trigger at the right time and right price. But my stop still might be 100 pips away, for example. And then, of course, a lot of people will like fall out of the chair like, oh my God, 100 pips, I can't afford that. And that shows you you're over leveraged. Now, typically my stop's not 100 pips away. It's closer to 30 to 50, but the idea should still be fine. Like, even if I'm on a 1 minute chart and I pull the trigger, I don't have like a 13 pip stop. That's silly, right? So, the time frame I enter my trade is irrelevant to the stop because the stop is based on the strategy. Okay? Does that make sense? Yeah, Stuart, if you're looking for a linear regression tool, right, which helps you measure the slope of the mean, standard deviation, that kind of stuff, yeah, that's built into MT4. Shervan says, perfecto. Awesome. Does anyone remember the simple formula for calculating the slope of the mean? Yeah, Pete, it came out as average. Yep. But that was my point. It's not really news if you're on trend. Yeah. Cool. Yeah. Oh, nobody remembers, huh? Nobody knows the formula? Calculate the slope of the mean? No. Why? The mean is M. How do you calculate M? Okay. B is the intercept. Y is the y-axis. X is the x-axis. What is M? M is the slope. How do you calculate slope? What's the simple formula for calculating slope? Rise over run. Well done. Muy bien. Okay, so one of the trades I'm looking at now, getting ready, is this this peso. Okay. Got pretty close to my limit order. And you can see we're at the top, the predicted top of the week. I would have liked it to have rolled over earlier. Okay. So a little higher is the next one, and this is where we are. Predicted top of the week. If you recall on Monday, I said I do want this to head down, but what the chart tells me is that we're going to go to 21.0700. So even though we're at M4, this has the potential to go to R2 yes, we have a monthly pivot in there as well, so I will have to do that. Okay. Yeah, so you can do y2 minus y1, which is the change, right? That's the delta of the y over the delta of the x. So how much did it rise versus how much, right? How much did it run? Rise over run. So, yes. Delta y over delta x. Oh, thank you, Dan. A work of excellence. Very cool. And thank you for blessing my soul. I appreciate that. I'll take it, man. I'll take it. Cool. So, anyways, I'm sitting here and I need to make some decisions. I want to wait and get some feedback from my swing trading group. Your customer says, do you think the stimulus will affect the flow to Mexico at the beginning of the month? Well, Mexicans don't get any money, only Americans and legal residents. So, which you would, right? So that might not change it. But if Mexican Americans send money home because they have excess money, then yes. More likely what will happen is people will have some money and they'll hire some Mexican workers to like work in the yard. Like, I don't mean like dig, like pouring concrete or something, right? Or redoing the roof, and the workers get the jobs. Okay? So in America, since COVID, people have been building home offices. People have been building home movie theaters. People have been repairing and fixing up their homes. People have been putting on new roofs. People have been putting in swimming pools. People have been putting in fences. So I've been talking to all kinds of workers in all kinds of trades, right? And all those workers are busy, ridiculously busy. Okay. Well, Maida, so what I'm saying is the illegals don't necessarily get a stimulus check from Biden or Trump, right? But there is a trickle down to the economics. So people that are locked up at home saying they need to build a home movie theater, very often they'll hire some white guy with a clipboard and glasses, and then and you pay him, $50,000, and then all of a sudden on day one, your basement's full of Hispanic workers doing the actual work. And you're like, hey, where's my white guy with the clipboard? So really what you want to do is find small businesses that don't have the white guy with the clipboard, because you have to pay too much. And what you want is you want the Hispanic workers, because they're going to do the work anyways. So here's the thing. Okay, let's get back to what we're talking about. You want some concrete work done in your backyard, you get a stimulus check, and you pour the concrete. The workers, very often, especially the good workers, are Hispanic. Right? You want the Hispanic workers. I'm telling you, the best work ever. Right? Quality, done right, never a complaint. Cool. So if the workers now have excess reserves, if you will, and yes, they can increase their consumption, they can increase their savings, they can increase their investment, or they can send money home to Mexico. You see? So will you see an increase in remittance? Yeah, maybe. Enough to warrant a change in your strategy? Yeah, probably not. Probably not. I'm much more interested in selling the dollar than buying the peso. Okay? Does that make sense? So if some of that dollar goes to Mexico, great, then I'll make money. Elon Musk says, wow, suddenly the audio is very, very good now. No more buzzing. Great. First of all, great. Second of all, it wasn't sudden, right? I had to spend a lot of time and good money to fix it, but you're important to me, Elon, and I want us to communicate effectively, and buzzing sounds do not help, right? Morena says, do Mexicans and Hispanics only do low-level work in America? Well, I guess, well, it depends if you consider trade low level. My personal experience is the answer to that is sort of yes. I mean, no. I mean, no. I mean, that's too generic. But I guess the question, Marina. So let's reframe the question. The question was, will the stimulus check impact flows of money to Mexico? Right. So, anyways, right, Meta, like, right. I have to change the question because I know that's not true. So, right, and it's too generic. You can't just say, all, Hispanics, for example. It's way too open ended. Okay. You can hate on the white guy at the clipboard. I think we all agree with that guy doesn't do the work. But let's get back. The question is, will the stimulus impact remittance flows? Okay, let's focus on that. So for that to occur, money has to leave the United States and go back to Mexico, money that was received by stimulus. So, right, if we're isolating Mexico remittance, then we'll have to say, well, Americans would have to send money to Mexico. So why would an American do that? Maybe they're going on vacation and they're going to Mexico. They're putting down money to reserve a condo or something, right? But I think that is fairly small and you wouldn't see a spike. And I don't think it's that easy to travel to Mexico right now unless you're a senator from Texas. So what's the next one? Well, what if you live in the United States and you got your stimulus and you have family back home? Well, that's kind of what we're really talking about, right? So someone in the United States sending money to a family, most likely it's their family, so they're most likely Mexican Americans. Then if they send money back to Mexico because they have excess money from the stimulus, yeah, okay, that would impact it. Now, what's the second way? It's not a direct transfer, right? It's not money from a Mexican American going to Mexico. The next one. Yes, I agree, Meta. Right? This is why I had to reframe it. Right? So, in that case, the next constituency would be the indirect flow of money back to Mexico. Now, how would that work? It would go from someone received the stimulus check, spent the stimulus check on a service provided by a Mexican or a Mexican American, who then takes that money and sends it home. But that's what's already happening anyways, right? So now it's just like on top of that. Well, of the tradesmen I've spoken to since COVID, everyone is unbelievably busy. Unbelievably busy. They've never had so much business ever. They're scrambling to keep up, and they're not keeping up. Things are delayed. What used to take a couple of months now takes a year. And by the way, the cost of material like lumber is skyrocketed. Instead of $3 a foot, it's $11 a foot. So it just shows you the demand and such. So going back, right, Meta, if we're talking about remittance, will there be a giant increase in remittance? Probably not, but it may go up. Okay. Okay. So that's why I reframed the question. It's not Hispanics we're talking about. We're talking about money flowing back to Mexico. How or why would that occur? Free money everyone's spending. Well, part of that is true, but also people not able to leave their homes. So, for example, think about this. Again, I only know the American experience. So in America, professionals didn't lose their jobs. If you were a waitress at Applebee's, you lost your job. If you're a senior marketing manager at a firm, you couldn't go to the office. You had to work from home and Zoom in to work, right? So what people did is they're like, oh my God, I need a home office. So they had to take a spare bedroom and then buy a desk, buy a laptop, buy a printer, buy a webcam, buy a microphone, so on and so forth. And so that required, money from like Staples or something. Right? And HP and Dell, right? That kind of stuff. So that's where that money went. But then other people were locked in their homes and they're like, oh, what am I going to do? My kids are going nuts. We're going stir crazy here. So let's build a home theater, for example, right? Or people didn't do repairs around the house because they kind of want to supervise and they're at work all day. But now they're like, now's the time to do the addition to the house. Now's the time to rebuild the deck. Now's the time to change out the windows. Now's the time to put on a new roof. Now's the time to paint. And so all of those things, so if you look at Lowe's and Home Depot stocks, they've done very well. But if you carry that out to like professional contractors, they're very, 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 very busy. Okay. And I talk to everyone, and everyone is busy. Okay. 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 So there, I'm happily investing into Mexico. Cool. Same thing going on here. We have no dips yet. In this case, what I want to do is have a drop and sell a lower high. So I'm waiting for drops to get back in. Right. Okay. Now, yeah, let's take a look at some of these. We're waiting and we're waiting. What do you think? Oh, it's hopeful, right? Cool. How about this one? One of the things I like to ask is, do you feel like something's missing? Like, do you clearly see it here and then you don't clearly see it here? If so, what is missing? This is just pure price action now, right? So if something's missing, what is it? What would you like to add to the chart to make you feel more comfortable? And that's the type of tool that you want to continuously to use. What do you see here? Well, once again, I'm looking for the signs of stabilization, huh? Support and resistance. Well, that's not, I mean, yes and no. I mean, there are multiple forms of support and resistance, so it's not specific enough. Are you talking about price or are you talking about market, for example? But if we had here, I have support and resistance outlined there, but just price, but not market. Are you missing market? Market support and resistance. And if so, add it and see if it makes you feel more comfortable. See, a lot of people have tools, but they don't use them or they don't use them right. So it's more like, what does your mind actually use? What's important? And then what is not important? So one of the benefits of having charts like this is that there's so few, right? And you could, let's say this is, okay, there's so few things going on here that maybe it's clear. Favorite pair, the one that's making me the most money. I have no favorites. I'm not trading currencies to make, I don't know, Canada feel better about itself. I'm not trading the Canadian dollar to make Canada feel better for itself, huh? CAD Swissy. Well, Richard, as I mentioned, I don't want to look at Swiss franc. Not interested. So the answer is no. Because I don't know if I can rely on Swiss franc. So no. So right now I'm just marking my lines. Okay, we talked about Kitty CAD yesterday, I believe, and actually had this set up. At what point will you buy in? Right? So now we've had, oops, that was supposed to be black. There we go. Right? At what point do you get involved if you want to get involved? Good job, Mon. Do I only swing trade? No, I position trade, I carry trade, I swing trade, I day trade, I intraday trade, and I scalp. Okay. Do I have an algo that scalps for me? No. See, the issue, guys, with scalping, I know it's probably been sold to you by a super exciting YouTuber or some guy trying to sell you a get rich quick course. My perspective, my somewhat humble perspective, scalping is so slow and boring now compared to what it was like when I first started that it feels like someone is selling you a dream that used to exist 15 years ago. So now, I mean, here's a 1 minute chart. Okay, this is so ridiculously slow compared to the old days. This is stupid slow. Why would you pull the trigger and sit and wait 20 or 30 minutes to make money? It's not even a scalp anymore. Okay, I want you to think about this. Let's use oil. Okay, oil's a great one because I used to do oil futures, but it's the same thing. Let's do. Okay, let's do oil. Let's watch 1 minute chart. Okay, this is a 1 minute chart. For me, I would click out. So let's say I'm in a trade. I would enter around 2:15, and by 2:30, I would want to be out. So now there's only a 15-minute, right? Okay, 15-minute window. Every day around 2:15, I would want to do a trade. I'd enter the trade, and I'd hold my breath. And more importantly, as it got closer and closer to 2:30, I needed to get out. So I would click the button, and once again, I would pray to get out. Okay, we've just watched almost 1 minute here. How much has oil moved over the course of the last 1 or 2 minutes? What is that, about 5 cents? I used to make or lose $2 in less than a minute. $2, not 5 cents, $2. It would go from $59 to $57, back to $59 in 45 seconds. And by the time I clicked out, I had to have my trades filled so I could get out of the market. And in the few seconds that it took to get out of my trade, we call it slippage. I'd hit out and you'd wait to get filled, and it would take 10, 12 seconds, and I could lose $1,000 while I wait. Okay? Wayne, do you think that there's less volume? No, there's hundreds of times, well, percent, right? There's 3 times more volume. Okay? That's why there's less volatility. So here we go. We've gone a couple of minutes now and we've moved about 5 cents. And someone tells me, Wayne, I can get rich scalping. I'm like, you don't even know what a scalp is. Forget it. Like, dude, more would happen in 1 or 2 minutes than happens all day now. So it's like, tell me to scalp. Okay? Non-farm payrolls would move 300 pips in the course of 5 or 6 minutes. Now it moves 30 pips in the course of 3 hours. So this idea of scalping and making a quick buck and getting rich quick, the danger of it is it's an old story and it's easily sold. I mean, dude, get rich quick without any real work. I mean, it sounds good, right? But here's the thing. It's an easy sales pitch, but because there's so little volatility relative to the old days, because the market is so mature, it's so extremely efficient that there's always a price, a good price. Back then, it was very inefficient, and you would have mispricing, and these things would move. News would come out, and oh my God, that changes everything, right? And just things like the end of the trading day, because oil trading actually stopped at 2:30. So, right, that's why there was a lot of volatility at the end. So now when someone says, hey, do you want to get rich quick scalping Forex? What it means is you have to jack up your lot size. You have to put big bets on trades, and it's a fool's errand. Okay? It's you've swallowed the hook, and you're going to get pulled up onto the boat, and someone's going to club you over the head. You're a sucker. Okay. So why not just focus on creating value? Okay. Okay. That's right. But you're right, Christopher. Right. And all that stress falls off your shoulders, right? So he says, well, if your position size is based on the percentage of your account, then the pip count isn't really that important. Yeah. Well, here's the thing. Like, so the same amount of money you make on 300 pips, you can make on 30 pips. The only thing is most people that are making 30 pips don't have a very good strategy to begin with. They don't really know what they're doing. They're trading because of something quite mediocre. Now, for you to make 300 pips on a trade, you don't get lucky. You understand that point, Christopher? Like, you have a solid understanding of technical and fundamental analysis, and you entered properly. And because there's value in your analysis, it was able to move significantly. Not just like let's say the average daily range is 100 pips, and currencies kind of do this, blah 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 blah. Okay, and here's your day. The top to the bottom is 300 pips, right? And now you're kind of pissing around trying to buy these little dips and this, that, and the other thing. But if you're buying a trend that is logical based on business transactions around the world, what we call economic activity, global macroeconomic activity, and you can use your analysis to say, well, US dollar is likely to weaken over the next couple of weeks because of the time of the year or where we are in the month based on the time of the month, based on the price in which we're in the month, based on your fundamentals. You believe the dollar will weaken, and this will last not just a couple of hours, but really a few weeks. And you enter your trade properly now on a small time frame, the same as someone that's going to make 30 pips, right? But your trade can last 300. Now you might say, well, the 30 pipper with the bigger trade made $300 on a standard lot, and you made $300 on a mini lot, but it was worth 300 pips instead of 30. They made the same amount of money. Yes, but who had the lower risk? The swing trader with the lower lot size. But also, who created more value? Someone that's in a trade for 30 minutes, or someone in the trade for 30 days? Well, clearly there's more value there, and you can compound, because if you have one trade like that, then on day 2 you add another one, day 3 you add another one, day 4 you add another one, and now you're compounding. Each individual trade has very little to no risk, where on the other trading that's only going 30 pips, every trade has big risk. And there's very little value to the trade. Like, you can't go to a business or an institution or a wealthy investor and say, every couple of hours, I'm going to come up with a new strategy, a new idea. And I can't talk about tomorrow or next week because I have no idea what's going to happen in the next 3 hours. But besides that, I can make you a lot of money. It's laughable. It's just ridiculous. And anyone with reasonable amount of money is smart enough to know that that's ridiculous. Right? So they're like, whoa. If you can't predict the next 2 or 3 weeks, you have no value as a trader. You are responding to the whims of the market, and that dictates that you're not in control. Now, a trader that includes a macro fundamental analysis, longer term, medium term, and shorter term technical analysis into a strategy and a tactical plan, they are adding value which is a good thing, and they can compound the value over time by adding more trades to the same strategy, which is also good. But imagine every single trade is taken one at a time, then the risk is moved. So now you can compound to the point where you've never taken more than 1/10 the risk of the first guy's one trade. So you could create a multi-million-dollar position never having taken more than the 1/10 risk that the other trader does every time they pull the trigger. And since those trades they happen a lot because they're so small, meaning you're in and then you're out with 25, 30 pips. Well, then several times a day you're taking 10 times the risk as someone else, right? So it's quite laughable to follow that other false dream. It's worshiping a false idol. The get rich quick in and quick out logic is attractive. Someone will tell you because your stop is small and you take your profits quickly, you never really risk much. And it couldn't be farther from the truth. It could not be farther from the truth. It seems logical. Well, you're only risking 20 pips at a time. It sounds logical. The math, if you take the time to do the math doesn't compute. And you're going to want to believe, but it's false. It's just false. It's just false. Okay? Okay? Greg, it's many millions. Not many. Two's probably not enough. We'll put it that way. Okay. Yeah, Dano agrees. Yeah, the thing is, it's so easy to get sidetracked. But anything that provides quick returns should be ignored. Hey, Walter. So anything that promises quick rewards should absolutely, totally be ignored. Okay? It doesn't exist. Okay? Okay? Sometimes you get, right, so Brad's been talking about GameStop appears, and some other opportunities can appear that they come and go quickly. That's a different thing from scalping and spot trading. It's different. For example, a hedge fund that has $1 billion, the only way they can make money is to find a glitch in the matrix and then bet big on it. And it's a function of the design and structure of that kind of investment vehicle. They are traders, and they're compensated to take big bets. In particular, in things that are like markets that are inefficient. Okay. All right. That's not what we do. I want you to, over time, and I did talk about this maybe yesterday or the day before, I want you to consider yourself more of a money manager, right, than a trader. Because the bigger you get and the more money you have, the more you're going to change your thought process towards money and what you do as a Forex trader. You're going to become more and more of a money manager, which means you have to think in terms of years in some cases. Okay. Yeah. Yeah. Well, Sylvester, we're talking about scalping as the primary means. So yeah, I'll scalp from time to time, but I don't really like a 20 pip trade. The only way it can be useful is if I'm over leveraged. So it doesn't really. Okay. Most people that are scalping are not trying to make 3% a month. And they're usually taking on more risk than negative 10% per month. Okay? In the real world, when you have real money, a 10% loss will kick you out of the business forever. Now, I'm teaching people to be a portfolio manager, and the terms I give them to trade is ridiculously liberal. They get fired when they lose 20%. Okay? Which means they never want to have a drawdown even remotely close to 20%. But you will be fired, kicked out, right? Pushed out the window. In the real world, there's no way someone's going to let you lose 20%. No way. So if you're only allowed to lose 10%, how many months in a row do you have to have just the worst time? You probably want 3 or 4 months where combined something is just not working. You don't know what it is. It's just crazy. No matter what you do, it's not working out. So you for 120 days, you've just been struggling, and now you hit negative 10% and they fire you. But you have weeks and weeks and weeks and weeks and weeks to pull yourself together and figure it all out. Most people that are scalping, that could be a bad day or a bad week, and now you're fired. But the thing is, you're fired from that fund, but you'll never get hired again because you are required by law to show 5 years of trading history. So to a potential client. So a future client shows up and they're like, hey, we're thinking about investing. Let's see your track record. And you're like, well, I just bombed out and blew up someone's account. I was down 10% and they fired me. Oh, but you can trust me. I mean, dude, you're dead. Your business is ruined. The overall. Yeah, IRR you can lose in a heartbeat. That's right. That's 20 pips on a mini lot. I mean, it wouldn't be IRR. Right. But yeah, of the account. Okay. And so and it would be 10. Normally it'd be 10. So the guys, think of it this way. If a very bad month is negative 3%, then what kind of risk are you taking per trade? And that's going to be determined on your lot size, but also your average stop placement. Okay. So if negative 3 is the worst month you could possibly endure, where many, many, many trades just fail out, then what kind of upside month can you produce being that conservative? You see the thought process there? So now you're like, well, then a good month is going to be like 3 to 5%. Yeah. Not per day, per month. Then you're like, well, wait, I won't make any money. That's because you don't have any money. But if you want to make money, you need to attract people that have money but don't have Forex skills. Okay? If you over leverage as a young currency trader, you only have 2 or 3 years of experience, you're not a boss. Okay? What'll happen is if you're taking high leverage, you'll blow up your trading account before you develop any real Forex trading skill. So you'll never attract money. So there are lots of people out there with lots of money but have no foreign exchange skills. So you're supposed to come in and say, well, I don't have any real money, but I'm a really good Forex trader. And now you have a partnership. Hedge funds are business partnerships. General partners and limited partners. Cool, it's a partnership. Great, some people have money and no skill. Some people have all skill but no money. There's a lot more people with money than people with skill. So now you're in demand. You get to keep 20% or more of the profits, for crying out loud. So you do that for 10 years. Now you got your own money. Now you're like, I could just trade my own money. Okay? Right? You put a couple of million in your own name into an account and you're producing 30, 40% a year with very little risk, doing something you enjoy. You have enough money. You have enough money. You're fine. Okay? So you will get there. But then you're like, well, I'm doing all the work for myself. And if I trade other people's money, I can live off that and then keep calm. I can turn my 2 million into 4 million, my 4 million into 6 million, my 6 million, right, into 10 million. And then you're like, oh, well, I'll just keep doing that. And you'll love trading other people's money. Plus, it's great. You can take people out for dinner and you can go on business trips and write it all off in your taxes and stay in fancy hotels, write it off in your taxes. Okay? So anyways, I want you to start acting like you have enough money that you can't afford to lose it. Because remember, the only person willing to take big risks with money is somebody with no money. So you will never be attractive to someone that does have money. In fact, you'll be repulsive. Right? You'll be repulsive. You'll reek of poverty. And they'll look at your trades and they'll go, oh my God, that is repulsive. You're up and down 20, 30%, down 20%, then you're up 30%, you're down. Like, how much money will I have at the end of the year? Will it be negative 30 or plus 30? And you're like, oh, I don't know. I don't know what's going on. I make it up as I go. Fail. Right? Well, Raymond, you're going to work for me, right? Then it's going to be good. But we have to remove volatility from the performance. Okay. Don't do anything with those fake prop firms, Christopher. That's my advice to you. Bullshit. Excuse me. Okay. Cool. La 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 la. So we'll move over to yen-yens. Yeah. Well, we can ask here, How many people have tested out these quote unquote prop funds that whatever? I don't know the names of them. They come and go all the time. How many people have tried them? Come on now. If you don't know it, don't even. Okay. No, they're not signal service. They're okay. 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 And how many people have a career making money for these firms? You're a professional trader. You have other people's money under management, right? You're making money. It's your career. Maybe you go on business trips. You hang out with your fellow traders. You go in the office every so often, meet the CEO. Yeah, it's phony baloney. Crypto Miner says that one is famous. Dude, I've seen hundreds of them over the time. Yeah. Okay. Yeah. Exactly. Sylvester. So, yeah. So. Mm-hmm. Right on, Green Planet. Okay. Mm-hmm. So we'll take a look just kind of where we are. Okay, I think we did the ends then. Yeah, I remember this one already. This one is the least attractive, but it's interesting because it is stabilizing. Okay. Whoa, hoo, hoo, hoo. Ooh, 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 ooh. Anyways, so we got some setups. They're coming together. There's some stuff out there. So we did commodities. We did some exotics. We did dollar. We did yen. Right? Gold, Bitcoin, oil. Yeah, I think we did enough. Okay. Okay. Michael says, "Am I? MTI. Great. Sorry, yeah, MTI. I'm probably going to do the MIT cryptocurrency course later this year. I think it'll be interesting. Uh, I think it's $3,000. Right? It's funny, like so the FX Bootcamp training courses they're less than $400, and I find it silly because all this I just went through 6 years of college. And a class at Harvard is thousands and thousands and thousands of dollars. I had to take multiple classes at a time. I'd have to move to the campus in the summer and live on campus, in campus housing, food and board. So I had to spend big sums on that. And then every class would have books that would cost, let's say, $400 or $500 per class. And then FX Bootcamp is $400 total. You're like, it doesn't even cover the cost of textbooks in one lousy class. So I hope everyone has the opportunity to do the courses, because I believe they will help you. And at least we can speak the same language when I'm trying to help you. And we move away from, the false dreams and the false idol stuff and the fool's errand style trading that gets pitched. And I want you to see reality. And the longer you know me, the more you'll understand that I want you to simply understand. I don't teach a strategy in the sense of, wait for the 5-8 cross to cross up and then wait for the next. No, it's wait for MACD to cross up and then wait for the next Stokes cycle to turn, and then you enter that trade and then you drop a stop. And no, those are techniques, but they're not strategies. And a strategy, the important part of being a trader and investor is knowing what strategy to employ based on market conditions, changing market conditions. So therefore, if you're going to be able to employ the correct strategy, you have to understand. You will need to understand the markets, the mechanics of the markets, the psychology of the markets. You'll need to understand macroeconomics and be able to read economic reports to update your view on macroeconomics, but also say, well, based on these macroeconomics, what would the central bank do? What's the monetary policy here? What's the fiscal policy here? What's the consequence of the monetary and fiscal policy changes? And what will they likely be in the near future? How will that impact the bond market? How will that impact the stock market? How will that impact the real estate market? How will that impact the oil and gold markets? And more importantly, business sentiment now and in the near future, so that I can make wise investment and trading decisions based on the flow of money globally. If you can't do that, and all you're trying to do is scalp your way into riches, scalp your way into a mansion, scalp your way into a yellow Lamborghini, scalp your way into a yacht filled with girls with bikinis, that's a childish, foolish dream. I don't know any other way of saying it. But instead, if you're like, I need to know this information, and you need to start a business that creates value for a constituency like an investor, and you actually create value over long periods of time, well, you're a business owner now. And this is what every business owner does. And this is why business owners succeed, even if it's a small business. They wake up in the morning and they create value for others, and they get compensated. They say, thank you. This is beautiful. I'll see you again next time. And they return. Okay? So I want you to understand. And at least for $382 or whatever it is, at least we can communicate eye to eye, toe to toe, and understand each other. And then from there, the journey begins. And it may take you years, if not a decade, to pull all this together just to start your journey on your own. And from there, you'll need to develop your track record. And from there, you'll need to reach out and tell people with money that you offer value to them. And years after that, you're going to look back to where you are today, and then you'll smile and be proud of everything that you've accomplished. And you'll be surrounded by clients that appreciate you. You will be appreciated. And that's the dream. Okay? Okay? Yes, Richard, yes. You watch there's closer to 50 hours of videos. But once you got that done, you can join the live group and we can move on. And then once you are in my live group for, I don't know, a year or two, and you start to develop good trading skills in your swing trading, then you can move on to the portfolio management team. But that one requires tests, right? So again, it's classic now, but during the test to see if you even, so you apply, right? You apply and you pay money, and we take you through some training, and then you're tested. And one of the things you have to do is trade over the course of a month. So we set everything up, and you have to install some EA so we can track you off of the server and stuff to see you actually trade. Can you actually trade the way that you're taught? And the thing is, your minimum requirement to be accepted in the group is in that month that we assign to you. A certain month, there's on a certain year, everyone gets the same thing. You open up your charts, you go there, and you click go, and we track exactly what you do, and you're timed and everything. And if you cannot make 10,000 pips, you're not even qualified to join the group. So before you can throw down and easily make 10,000 pips on a good month, it's not a random month. It's a specific month where we know you can do this if you simply follow the rules of engagement. So if you're like, well, wait, I don't know, I'm not that good yet. Well, then you stay in my group and I teach you how to swing trade. And if you're like, wait, I'm not ready for Wayne's group yet, I still need to know the basics of technical and fundamental analysis. Well, then you're in the video training, right? So there's a logic and a process to this. Right? Right? So anyways, oh, well, what Greg is saying, illegal isn't the right word, but it's sort of, right? No, you need to be licensed and registered, for example. And then in the United States, your firm has to be licensed and registered. And then you have to be licensed and registered as an associated person to the firm. And then if you're a principal, you also have to register as a principal of the firm. And then if you're trading Forex, then you also have to be licensed and registered to be a Forex firm. And then you have to be a principal or an associate of the Forex firm and a principal or associate of the trading firm in general. And then there are certain requirements, like you have to be a Forex trader. Not only do you have to be, both your firm has to be licensed and registered, and you have to be licensed and registered and associated with the four, right? Then you have to do things like the Series 3, which is a big test. But then I think you need the Series 34 to show that you know how to be the principal of the firm. So there's more rules and regulations for that. And I think there's one other, the Series 3, the Series 34, and I think one other thing. Okay. And then of course you have your quarterly reports, your annual reports, your third-party outside audited reports. In your first year, there'll be a site audit. It's a mock one. It only lasts a day or two. And then every so often, you'll have a full bore, 3-month audit where they go through every trade, every email to clients, every financial record on your accounting firm, your audited financials, but also they'll go through all your credit cards and all that kind of stuff literally for years. And they'll break down your net cap requirements. So you might need 30, 40, 50,000 in cash in your trading account, not your trading account, in your business account. That's your net cap requirement. And you have to report that monthly, annually. But during your audits, they'll break it down monthly and even daily. Okay. So to go all through that would be your minimum requirement to accept $1 from a potential client, unless you got like you're trading your auntie's money, right? Your auntie, right? And your stepdad give you, a couple of grand each. You can trade that without being licensed and registered. Yeah. But if you are going to be a professional firm, make sure you have at least $100,000 to cover the requirements and the fees and the net cap and other startup costs for your first year if you're going to trade in the United States. Okay. And you could spend somewhere between $50,000 and $200,000 a year in compliance. So yeah, you'll need $100,000 to get going, and probably another, let's say $100,000 per year in expenses. Okay. So now, if you think about it, let's say you charge your clients 20%, and your basic costs are $100,000 upfront and $100,000 a year. So your first year, your costs are $200,000, and then from there it's $100,000. So how much money do you have to make just to pay for the business? And then how much money do you want to make? So let's say, well, you want to make $250,000 a year, plus you're going to have $100,000 in expenses, right? All right, so now you made somewhere around $350,000 to $400,000 a year to kind of just have bare minimum. Okay, you probably also want to have a retirement account. But there's ways of doing that on the business side. You're going to need to pay for benefits like healthcare and stuff because you might have spouse and kids. So you're really pushing about $500,000. Okay, you're really, and you need to have a safety net and stuff like that because some months you lose money and you still have to pay your mortgage, right? So let's just say you need $500,000 a year to be a Forex trader in the United States, a small time one, right? So $500,000 a year. And if you made $1 million for your client profit, you get $200,000 for yourself. Wait, that's not enough. So now you need, if you made $5 million profit for your client, okay, right? That's $1 million. So you need $2.5 million you need to generate in profit. Now, that means if your client gave you $2.5 million and you doubled your account, which is quite crazy aggressive, you get what you need. So really, that's not likely. So now you go back to the $5 million and you have a great year. You produce 50%. Now you're living your basic minimal life. And by the way, you can't live in New York City only making $500,000 a year. So now you have to live in a small town somewhere. You need $5 million under assets under management. You need to produce 50% a return per year, which is far excess of the stock market. Like those are ridiculously high terms. So to live your lifestyle on the 500K, really, it would be more ideal if you had 10 million under assets under management and you're producing 25 to 30% a year, which again, in normal years, far exceeds the stock market. So you're like, yeah, okay, you're going to need 10 million to live your modest $500,000 life and cover your expenses and all that kind of stuff, right? And people are like, oh, I can't do that. Oh, well, then it goes back to what, who said it, that you can't, it's illegal in the United States or you can't do it in the United States. No, there are processes to these, right? So there's not a lot of room for small time traders. Okay, but you have to understand you've chosen a sport for kings and queens. Okay. Brad took the 7 and 63. Yeah, not appropriate, right? Those are SEC. So that, yeah, irrelevant. I mean, it won't hurt you. Right? Because now you can say you got the 7 and the 3 and the 63 and the 34, right? Okay, cool, right on. But they're different regulatory agencies, and right, not the same. So like, right, so SEC and FINRA and CFTC, they're all different. And of course, CFTC delegates to the NFA. Okay, so anyways. Yeah. Oh, you did it 20 years ago. Yeah. But you know what, though, Brad? If you took the Series 7 now, it's way different than the Series 7 20 years ago. Okay. So I know people that have retaken it and they're like, oh my God. And it's interesting because none of it is about markets anymore, and it's all about regulation. What's the regulation for this? What's the regulation for that? What are you supposed to do with this? What would you do with that? Right? So it's not about markets anymore. It's all about the unbelievably complicated and convoluted requirements to be regulated. Yeah. Cool. So I don't know if that was helpful, but that was interesting, maybe. So I'm really glad we got this microphone thing taken care of. So thank you for your patience with me on that. My Razer mic is actually pretty good, but obviously it's not good enough. I don't know what it was. Maybe it went sour on me or something. But this is that new microphone. Apparently it's good enough for Coldplay to sing with. Look at the stars. Look how they shine for you. Everything you do, my love. All right. So if it's good enough for Coldplay, I guess it'll do for me. Yeah, sounds good. I'm glad it gives me a radio voice. Does it make me look taller? Gregor says the best thing, and he's figured this out. Well, I'll trade my own money. Yes, that is. But so here, Greg, this poses, I'll end with Greg's comment here because it poses an interesting problem. Greg, the number one thing from turning whatever amount of money you have into a fabulous pile of cash is that now you will need to live on it, Greg. Which means you might be burning 50% of your profits every year on stupid things like your mortgage and your car payments and your medicine and your food and your family vacation and, putting gas in the car. And all of a sudden you're going to exponentially slow yourself down, literally exponentially. And most people will probably burn more than 50%. Some people burn 100%. So you have 200,000 in your account, you turn it into 300,000, so your profit is 100. You burn the 100 and you're back at the 200,000. Well, as soon as you have a bad year, you're out of business again. Okay. Thank you, Maida, for your patience with me. Okay. So here's the real thing, right? Have enough money when you trade on your own that no more than 50% of your profits can pay for your lifestyle. But almost never can that happen. And ideally, the most ideal situation you could have is stay broke. Stay broke and stay poor as long as you possibly can. Okay? And save every single penny you make in Forex. And grow it 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 and grow. But we also know it gets to be a problem you're dead broke. You're living in a studio apartment. You got dirt for floors, right? You only have a bed and a desk, and you can't be any more impoverished. But you have $1 million in cash in your trading account. Well, we know you're not going to do that. Okay? You're like, oh, it's so hard being this poor and have $1 million in cash. You just know it's not going to happen, right? So how do you get to that point where you can grow your money and not continuously eat your money? Because what you don't want to be is generally the same amount of wealth 10 years from now, because you keep eating your profits. And ideally what you have is you have so much wealth, as I said before, is you take some money out of your trading account and you buy an income producing asset that in 25 years from now will be paying your whole lifestyle and taking care of you, right? Like your children were supposed to do. So, okay. So how do you get out of that paradox, Greg? Where you can trade your own money, but become fabulously, fabulously, fabulously wealthy beyond your wildest dreams. You have to trade other people's money. You have to start a business and say, well, I got all my money in my business and it's working. I can do the same for you. Okay? So now you trade other people's money doing the same thing that you have. So imagine you just commingle your money with their money. Like, I'm not saying that's the right structure, but that's like a hedge fund. Limited partners put in $1 million each, then they go out and raise a whole bunch of money from others. So now they have $100 million. $2 million is the general partners, 98 million is the limited partners, and now you have a partnership and the money is commingled. But the interesting thing is at distribution time, okay, the limited partners get their cut, but you get your cut. And your cut is so big because it's 20% of the profit generated from $98 million. You live on that money and you never touch a penny of your money because you get to keep 100% of your profits and you get to keep 20% of their profits. And here's the thing. So you've obviously produced a return. So now your money, let's say, doubled. And then another year goes by and your money doubles again. Another year goes by, it doubles again and doubles again and doubles again. And you start playing this game mathematically, and maybe doubling's too much. Well, then do the math. What if it was 50% a year? What if it was 25% a year? What if it was 33% a year? Can you produce 33% a year without dropping below -10? Well, if you can, and you just do the math, year one, up 33%. Year two, up 33%. Up, and you do this 20 years out, you're like, oh my God, I'm rich. So that you're rich, not because of the 33% per se, you're rich because you never touched your money. You're like a drug dealer. Don't snort your own coke. When you're trading money, don't spend your cash. Provide some sort of value and live off that your creation, your piece of that pie, and let your other one compound and grow over long periods of time. Well, oil be. Okay? And it is literally exponential. Okay? And that's what it works. And that's why if you want to become a general partner in a hedge fund, a general partner in a venture capital fund, a general partner in a leveraged buyout fund, they're going to say, okay, do you have the qualifications? And you're like, yes, I'm really, 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 really good. Okay, good. I see your track record's fantastic. Okay, great. All right, so as a general partner, you'll be required to put in $2 million of your own cash. And you're like, wait, I ain't got no money. Like, wait, you just told us you were a fantastic trader, investor, whatever. You're like, yeah, I'm really good, but I don't have any money. Well, forget it then. We're not interested, right? Because the limited partners are going to require general partners to have skin in the game. So you got to get to the point where you have skin to invest into the game. That would be your 200,000, let's say. Okay, Greg? And then for 20 years, you compound your 200,000 by 33% a year. So you're not going to be rich this year. You're not going to be rich next year. You're not going to be rich the next year, the year after that, or the year after that, or the year after that. But 20 years from now, beyond your wildest dreams, which means you're going to like reinvest some of that stuff. You're going to buy some real estate. You're going to buy some of this. And you're going to have a huge stock. You're like you're exposed to the stock market. Okay. So because you've invested into that and you have retirement accounts and you got money tucked away everywhere. Okay. You can't die tomorrow because you're too rich. You can't afford to die. Only poor people die. Okay, Sherpa? You'll pay someone else to die for you. Okay? Okay? Well, you have to understand money. Most people don't understand money. Okay? Money is a very interesting thing, and it's malleable. But the secret is time. Okay? The secret is time. Money is very misunderstood. Okay? So as you increase your net worth, you will treat money differently because you will never want to spend it today. Because it's over the course of time. So let's say you go out and buy a $50,000 used BMW. The thing is, you might say to yourself, well, it's only $50,000. I got a lot of money. The way that you should be thinking about it is, well, if the $50,000 was invested in compounding at a certain percentage over 20 years, that this is going to cost me an extra $1 million. And you're like, I don't like this BMW that much. I'd rather wait 20 years than have the $1 million or whatever the number is, 500,000. Certainly it could be 500,000 over 20 years, right? So you're like, I'll take the 500,000. I'm not really interested in right? So that's the interesting thing, guys. The flashy ones on YouTube, the flashy investors, or the flashy, let's say the flashy traders on Instagram. I don't use Instagram. TikTok. I don't use TikTok. YouTube, Facebook. I don't use Facebook, but I know they're out there. The flashy ones, the big vacations, the fancy cars, right? Throwing money out at everything. Here's the thing. It's bullshit because they clearly don't understand anything about money. It doesn't make any sense. Because like going through my logic, you're like, well, if I drop 50K on this, BMW, it's going to cost me at least 500,000 down the road, so I won't do it. So the people that do that kind of stuff, they might have $100 million in the bank. Because people with normal levels of wealth are earning the money. They're earning the money. They're deferring their pleasure and they're compounding. They're making investments. They're buying conservative. They're investing. They don't consume. They save, and saving becomes investment, right? Because we know consumption minus savings is equal to investment. So they save the money in different ways. They put it in the bank invests it, or they put it into a CD and the bank invests it, or they buy some bonds and the bank invests it, or they buy a mutual fund and the mutual fund manager invests it, or they buy the S&P 500 and now they have an index. Okay? They do things like they buy real estate, either maybe a house somewhere else in the neighborhood and they're collecting a couple of grand every month, but they know through depreciation and amortization, right? It's going to produce income. It's going to go up in value. And in 15 years, if they have a 15-year mortgage, They'll buy out the bank and they'll have 100% of everything, and that's what they're doing. For example, right, my Forex business has a retirement account for its employee. And I take out $3,000 a month and put it into my retirement account, which I am forced to trade in the stock market. Plus, I have retirement accounts outside that. That's the one corporate retirement account. I have a different retirement account, right? Then you have your trading account, your personal trading account, your corporate trading account, there's just all these little areas you park your money. Oh, you got 2 Roth IRAs over here. You got a retirement account over there. You got your college savings funds for your kids. So money is going in there every month, and that gets invested into the stock market. So all of a sudden, you're a Forex trader, and you're super exposed to the stock market. Plus, you own your house, and then maybe you have an investment, a second house, or maybe you have a vacation house, or maybe you put all that together and you do really well, and now you buy an apartment building. So 20 years from now, you've deferred everything. You're not driving a yellow Lamborghini. You're saving for your kids to go to college. You don't have a yellow Lamborghini. You're saving for your retirement. You're maxing out if you have a job, you're maxing out your retirement accounts. I could take $3,000 a month and lease a Lamborghini. Instead, I put it in a retirement account. $3,000 a month. Okay? Now compound $40,000 a year invested into the stock market. By the way, I haven't paid taxes on that money. Right off the bat, I get 33% of that because I would have paid it in taxes. So tax-free, before I pay the tax man, I take $3,000 a month, so $36,000 a year, and it gets invested in the stock market. Compound that over 20 years, it's millions of dollars. So I could just say the $3,000 I get tax-free into a trading account, because this is just how you structure businesses in the United States. So I have my money, and then some of it comes out and goes into this retirement account, which then gets invested into the stock market. Cool, but I didn't pay taxes on it. And in 20 years will be worth millions. Or I could take $3,000, lease a Lamborghini so I can impress you, so that maybe girls in bikinis will fall in love with me. Now, the funny thing about fancy cards, they're dude magnets, not chick magnets. Teenage boys are going to come up to you. Maybe that's your thing. I don't know. But women are not going to be impressed. So all of a sudden you're like, wow, I'm really misguided here. I gave up millions of dollars of wealth to lease a Lamborghini so chicks dig me, but they look at you like you're a fool. Women want to know that you're mentally and emotionally stable with a steady income, that you might actually marry them and you can build a family, and you will save money so that they can go to a good university. And when you're old together as a couple, there'll be millions of dollars in the bank so that you can spend some time together smiling in a warm, beautiful place. That's what will attract a beautiful woman, guys. That you're not a boy, but a man. Serpa says, Serpa 89, women are impressed by a Lamborghini, trust me. All right, you might one night her, but you won't wife her. So anyways, that's that. I'll get off the soapbox. Peace on earth. May the pips be with you. May your profits be above average. If you're in my live trading group, I will see you at 2 p.m. We're going to set up trades, 3, 4, 500 pips each. It's going to be epic. It's going to be epic. So I'll see you guys at 2. I'll see you tomorrow. Otherwise, all right? Cheers. Thank you, Traders Way.